Welcome to the webinar. I'm Matt Holmes, Director of Marketing at BuildCentral, and I'll be your moderator for today's webinar. Today, we're going to be talking about multifamily housing. And as many of you know, forecasts for the future in this sector have been all over the place, from rosy to skeptical to cautiously optimistic. So today, we'll be sharing what our data has to say about these things and how you can respond. Presenting today will be Tim Slavin, partner at BuildCentral, and Kyle Camp, VP of Business Development at BuildCentral. We'll also be hearing from Andy Jarek, who leads our multifamily data research team. Before we begin, just a few housekeeping notes. You can ask questions at any time using the chat box on your screen, and we'll try to address any questions as we can during the Q&A at the end of the webinar. If for some reason we don't get to all of the questions live, we promise to follow up with you offline. If you are having any technical trouble, please put that into the chat as well and someone will assist you. And FYI, we will be sharing a replay of the event within the next 24 hours for you to share with any colleagues or business partners. Next, just a brief walkthrough of the agenda for today. Tim will briefly introduce BuildCentral and multifamily data for the uninitiated. Kyle will review some of the market drivers affecting the industry and his advice for navigating this space successfully in 2019 and beyond. And I'll have a conversation with Andy Jarek a bit later. And again, he leads the multifamily data research team. We'll discuss some noteworthy trends he's come across recently. Kyle will pop back in for some additional topics, and Tim will wrap up with the summary, and we'll move into some questions from the audience. So on to our first presenter. Tim Slavin's a partner at BuildCentral. Tim has 20 plus years as an information services executive for companies like Dun & Bradstreet and Info Group. He's been involved in numerous turnarounds and startups with several successful exits. And as founder and CEO for Healthcare Data Solutions, he was on the Inc. 500 list for 3 consecutive years. Tim's been leading the sales and marketing efforts at BuildCentral since 2016. Over to you, Tim.
All right, thank you, Matt. I'm glad everybody could join us today. We're excited to talk a little bit about the multifamily market, and we're going to begin with a company overview. So about 10 years ago, BuildCentral made the decision to go deep into multifamily medical and hospitality and create special products and services to uniquely address the needs of that market. And it's bearing lots of fruits for our clients, and it's something that we're pretty proud of and excited about as well. To give you an idea as to who you're doing business with, who is BuildCentral, I like to be able to share a little bit anecdotally about what the company is unique and what's unique about the company and why I love my relationship with BuildCentral. So we focus first on research. We have to bring unique proprietary research to the market. If we do that right, our clients are able to capitalize on unique value-based relationships that get them further in the marketplace than you could in a bid and chase type scenario. So we're uniquely focused on bringing quality research representing unique market data so that our clients can be more successful and achieve a really high return on investment. We're able to do that because we have the right company culture, and created by our founder and CEO, Rick Kang, we've created an environment where we focus on our client success and our employees' success. And if we do that, we find that the results really are exemplary and speak for themselves. One of the things that I call attention to is the idea that the entire company, from a research person who joined the company 30 days ago to the senior executives, have self-managed PTO. So by placing that trust in our employees and allowing them to govern their time off, rest and relax, recharge, they're able to be more successful in their company. I think the culture is pretty important. The other side of that, I'll call to a call that we had actually just this morning. And it goes to a company that we're working with that's trying to extricate themselves from another data relationship. And after doing business for 30 years with another data provider, they're finding it's sort of like getting out of a Time Warner contract. It's very, very difficult. And we have a different approach. And the best thing that we can do is tell you what's unique and valuable about our offering and our approach to the market, and let our clients make a decision about really what's the best solution for them. So all of that tied together, we're delivering this data, we think at a fair price and with a great services team. So for all of those reasons, we think BuildCentral is a great place to do business and a great business partner for our clients, and we get that vote every day, which is pretty exciting. One of the things that I enjoy most about BuildCentral is the opportunity to lead the sales team and to actually help them be more successful in their sales role. So we're going to tell you what's been working here at BuildCentral, why we've been growing, and maybe some of these things will be helpful for you as well. So we feel like there's nothing so dangerous as a buyer with a budget. So one of the things that we talk about is we have a company that's interested, they're looking at their data, they're doing a test drive, but do we have a buyer with a budget whose timing is right? And that question needs to be asked first. And if we answer that question successfully, we have an opportunity to move forward. If you go to the next slide, Kyle, I think we'll flip back. We're just kind of doing it in opposite order here. The second thing that's been successful about BuildCentral the past 3 years, where we've been growing 20-25% year over year, is that we look at the forecast closely. And most forecasts are actually doomed because we have an overly optimistic view of the outcomes. And one of the things that I like to tell my sales team is that the first verbal commitment that we get is a stall tactic. So we really don't believe that until we get to we have to go through finance, we have to go through legal, we have to make certain we're talking to a decision maker. And all of those are complications that are often overlooked because we take such comfort in the fact that, Bill said he's going to sign the contract with us. That tends to relax us because we feel very confident about the outcome. But I need at least 3 ways to win. If I'm going to actually deliver a top line and we're all trying to create exciting future revenue for our companies, if we really want to do that, I need at least 3 ways to get there. If I've got one way that's going to make it happen, really too risky for me. So the other thing that we're doing that's kind of working really well is team selling. I have somebody who is fully capable, an expert, subject matter expert in multifamily and versed in the business, and he has more experience, but I'm on a sales call with him simply as a support and listen role. So I want to hear what all the buyers have to say. I'm going to back up what my account executive, the leader on that account, is doing, and I'm going to hear different things. I may ask different questions, but purely in a supportive role, we find that if we have 2 people on the call for each of those opportunities, one in a supportive role, the outcome is generally better. And so that's something else that we're doing. I like that a lot. I'm going to do sales as a contact sport, the next slide there, Kyle, which is one up. So I find that our teams are overly reliant on electronic communication, email and text. And so to have success in this, we really need to contact them on the phone at the right points in time. So I'm using electronic information, either emails or texts and even large-scale email communications to find prospects and discover interest. But if I'm going to build a relationship and finish the relationship to a successful outcome for everybody, I've got to get on the phone. So if I get an email about a problem, I call them. If I want to build a relationship with somebody, I call them. If I want to listen and learn about what's going to happen, it's at least 20 times more valuable to have a 3-minute conversation. And the real test for me is if I'm taking 5 or 10 minutes to craft the perfect email, just trying to get the tone and the outcome right, I know that I should have called that person long ago. And I think that our buyers, our clients appreciate direct personal communication, specifically when you're asking questions and you do an excellent job of listening. So in our success in recent history, which has been exemplary, and we're very proud of it, and we have to thank all of our clients who are on the call and those who may be joining us in the future, we're going to pick up the phone and call and ask the questions and make certain that you get the answers that you're looking for, and that ultimately you're a lot more successful with the benefit of access to multifamily data and our research team and being able to ask them questions. All of that I think is supportive of our clients and helps them achieve more, more rapidly. All right, next. So Kyle Camp, Vice President Business Development, he's your next speaker. Kyle joined our company last year. We were lucky enough to grab him as an industry leader and a person with tons of experience in solving problems with structured syndicated data like BuildCentral offers. He's a great asset to our team, and I really appreciate his leadership in our business. And if you have an opportunity to talk with him or do business, you'll be glad you did. So Kyle, off to you.
Thanks, Tim. I appreciate the introduction there, and welcome everybody who's joined us on the call. I know that every time I get a chance to operate with Tim on a daily basis, I learn something new, and so I really value the time I get to spend with him as well. What we're going to do today is we're going to take a walk down the multifamily market. We're going to explore what's happened here recently and talk a little bit about what's kind of been historical about this unique rise in the multifamily market that doesn't really match any other growth markets in the past. And we're going to explore what's happening, what some of the current trends are, and then look at some planning and what projects are involved in the near future here for the multifamily market, talk a little bit about what we're seeing. I look forward to do that. And as I was preparing for this conversation with you, I spent a lot of time looking at what other people were seeing and what their discussions were about in the marketplace. And so I found a few examples here of people who are in the marketplace that are credible and have a viewpoint that should be thought about and looked at. And so when we talk about CBRE, obviously they're heavily involved in this marketplace, and they're looking for completions to be high in 19 and but kind of be a bridge market here into 2020. And when you talk with and look at Daniel Hogan from Red Capital, he presented some information here just recently at 2018, and he's talking again about this kind of movement into a new normal growth in 2020. And the next one that's kind of floating into the screen here is a look by Freddie Mac, and they publish, what they see in the market. They talk a lot about some interesting valuations and things that they're seeing, but they're talking about the abilities and what's coming that can still drive demand, can still continue to improve growth in the marketplace. So at best, we're in a very confused and unprecedented grounds. When you think about this market and the rise of multifamily since the Great Recession here about 2009 or 10, you see that the uniqueness showed up really early. Normally, recovery from a construction starts with single-family homes and then leads into the multifamily homes, which then leads commercial and then onward onto institutional and the engineering project. But in this market, the single-family homes stayed regressed for a while, and multifamily jumped right to the forefront and talks about something that's unique in this cycle and continues to be unique as we look at the length. So I'm going to ask you, we have a whole group here. We're going to do a poll. It's going to show up on your screen. I'd love to hear what your thoughts are specifically about the marketplace. So you got 4 answers. You have the ability to kind of click here and kind of we'll see what the room thinks and what they see. Everybody on the call is an expert in a viewpoint, so please take some time here to pick a point. You can say, yes, the multifamily boom is over. What a great ride, but she's done. Put her to bed. Or, you don't see an end in sight. It's still rolling. Or, no, it's not done yet, but this is the year. No, it's not done yet. 2020 will be the year. So please keep communicating here and picking your market. And as you do that, I'll read to you that, one of the kind of most interesting quotes that I found came out of Globe Street. It was actually referencing a Real Share Apartments conference survey, and they asked multifamily investors, the capital, what are you seeing, and are you opting to take a wait-and-see approach in 2019? And what they said is about 16% were the previous year where they were not going to be buying or selling properties, and it went to 42% in the end of 2018. So it was a dramatic increase in the amount of capital that was thinking they were going to kind of stand on the sidelines here. So please continue. I think we're at a point, we're getting close where we can close the poll out here soon. And here we are. We're going to bring some results here. So, hey, what's interesting here is nobody, as you can see, thinks it's over. In fact, very optimistic group of people, and I'm excited by that because I think it's somewhat true. It may be shifting, but there's reasons that we can talk about in this presentation that will go forward into showing certain aspects that are still maturing, certain aspects for growth, and obviously if you can find the pockets. So there's what the room says, pretty optimistic, and we're ready to kind of continue here in our discussion. So as I do that, I want to make sure first of all and foremost that we have an understanding of what BuildCentral will be referencing when I talk about some of our stats. So in multifamily data, we actually capture all of the multi-dwelling units. So we're going to be looking at things like luxury, market rate, and affordable, the kind of the more common, but we also are tracking and looking at the senior living included in these numbers, which would include everything from the more independent through the medical treatment and care. You have also in these numbers that we'll talk about today, student and military, as well as some other. And the other really doesn't play a big role, but we find projects, things like campgrounds that have rentable cabins or things like that. We need a place to put them, and so we have an other category. A couple of the other things I want you to be aware of that we have in our data set that allows us to talk about is that we have the ability to track from early planning of a project, only when an owner is involved, all the way through the start of construction, but all the way through to completion. So many of the numbers that we're going to show you today are based on completions and talking about when that rental, that leasable unit hit the market. So most of it will be completions unless I talk to you otherwise. We're going to break them out. We'll do a little bit of segmentation on the senior living side compared to the more common commercial luxury market rate affordable. And we do report on all aspects of construction. So we have new addition renovations. We actually even are capturing conversions. So when a previous building is shaping into a multifamily, you're seeing some of that happening with hotels and things like that, I'm sure, across your marketplace as well. So a little bit of background. If any questions come up along the way about the charts, please don't hesitate. Use that chat feature as expressed at the beginning and send it to us. We'll make sure we try and address it at the end of the call. So let's talk about national trends and what's happened here most recently. Overall, we're looking at new and additions in these numbers, not necessarily renovations. I've stripped that data point out of this, but we're looking at new and additions where they're actually adding units. In 2017 over 16, project counts went up 15% across the U.S. in our database, and unit counts were up 12. And when you look 2018 to 2017, you see that continue that trend. Where project counts started to go flat, but there was still a heavy build and unit counts were flat to up. So more units, just a touch more units, 18 versus 17, and this is in completions. When we look at when we compare the amount of units put in 2018 over 2016, you actually find that there's kind of a mixed bag across the country. We had 21 states that added fewer units into their inventory in 2018 than what they added in 2016. Those units that were adding fewer are led by New York, actually, as we look at those 3 years of completions. New York was, in 2016, made up 11% of all the units added into the U.S., and in 2018, it was 8%. So that pulled back significantly, which where New York goes, a lot of the press picks up, and we'll talk about the market retracting. On the other side, though, there was 26 states that added more units in 2018 compared to 2016, and those were led by California, Texas, Massachusetts, which was kind of unique, pull out the data, and New Jersey in that order. Those were the states that were significantly adding. So what that talks to is that this market conditions are heavily regional. And so we're going to spend a little bit of time here kind of just trying to assess that. We've got callers from the call list here from all across the country, and so we'll do our best to try and address some of those together. But we're going to use census regions. So census regions, there's 4 primary here. The map kind of calls them out, and they combine a series of states together. There's actually, I think, 9 separate units within these 4. But when we're talking about them, this will give you a good example or an understanding of what I mean when I call the Midwest versus the Southeast or the East. So if you compare, we'll go back here one slide. If you compare the actual projects here, the red matches the East in the map to give you an idea. But when you take a look at these build outs, you see a couple things that stand out right away in the last 3 years. The South is the monster, right? It's got the most states, but it is the monster. It is leading kind of the marketplace for the U.S. as a whole, capturing about 39% of the units that were added came out of that region, census region. And that's led by, as you would imagine, Texas. Texas had of that region, Texas in 2018 had 29% of the units that were added. It was followed by Florida, which had 22% of the units. So in just those two states, there's over 50% of the units were added just in those two states for that region. A couple other things to point out here as we look at a little bit of longevity. The West is starting to expand its influence. It's heavily led by California with 49%, almost 50% of the multifamily units that were added in the West were added in the state of California. Colorado and Washington, the next closest states, they had 11% of that region's production in 2018. Just to kind of note, in the Midwest, Illinois leads with 21% of the market, Michigan second at 13 of that one region. And then last, we'll talk about the Northeast, where in 2018, even though it retracted significantly, New York still added 44% of that market's addition, and Massachusetts at 17%. So you'll see that there's significant contribution from just a few states and drives it. So let's just look at the states then overall. So we're looking at percentage of 2018 completion of multifamily units. Who leads the track? So New York, even regressing in 2018, comparatively, is still the #1 in total projects. So 13% of the multifamily projects that happened, we reported on our database were in New York. You'll see kind of the usual suspects here in California, Texas, Florida, Illinois, Massachusetts. Washington's interesting to see hitting this, and Minnesota as well is not something maybe in the top 10. And if you look to the second part of that column, you get the opportunity to see how they contributed percentage-wise for the total number of units in the completion of 2018. I put my friends here, Wyoming and Alaska, in there because I've never attended a construction webinar or reporting where those two states get mentioned. So I'm going to mention them. They are the last two states contributing not even a percent here to the inventory put on board in the U.S. So a shout out to anybody from Wyoming or Alaska. The next piece I want to talk about is our ability to look at the class breakdown. So when we talk about class in our multifamily units, we're talking about luxury versus market rate, affordable, senior student, and then other really is just a slim, thin layer. I don't even think it registers a percent of total. So when we look at 2018, luxury makes up about 9% of the market of total inventory coming online. Market rate, as you would imagine, leads the category at about 59% or 60%. In 2018, affordable is about 11% of the marketplaces we're tracking. Seniors about 15%. When you look at some of the longevity, look at how the stacks show up there. It's a little bit hard to pick out in the senior category, but even with the meteoric rise of completions of overall multifamily, senior living continued to stay about 15% all the way across the board. And what that means is it's growing very significantly too. That's going to be an inflection point that comes into the marketplace, we believe, in the next couple of years as the normal affordable market rate luxury maybe will start to pull back some. Senior living, there's reasons to believe that that's just going to continue to grow. So we expect that in the next couple of years to show up as a larger proportion of the overall marketplace. Continuing on, we'll take a look now at the units per project. I'm sorry, units, we're going to look at the breakdown of the rental units versus the for sale units. So really the only thing remarkable about this graph is the fact it's not remarkable. So it's stayed basically consistent, and we're looking back now the last 3 years plus what we're forecasting out this year for sell and buy. Now in 2019, we're kind of forecasting some completions. We're going to be adding more to that as the year continues, and there's a little bit of change here, but basically this breakout of rental units or apartments that are going to be made to be rented compared to multifamily units that are intended to be sold, i.e. condos or townhomes or the like, has stayed basically the same across the market. I'm going to go try and get back here to the next slide and talk a little bit about units per project. I thought this was somewhat interesting and worthwhile of our discussion today. So when we talk about units per project, that's exactly as it sounds. I took a 3-year average. So this would be completions that were in 2016, 17, and 18. Combine those 3 years together and average the number of family units that were created per project. And Texas leads the way with 170 family units per project on an average across those 3 years. You'll see some things interesting here. You got Hawaii, you have Florida and Nevada, you have some of the big ones, and that's going to be tied heavily to urban environments, or maybe in the case of Hawaii, more so the land conservation needs to happen. You need to go up and more vertical. When you look at the overall regional totals, you'll see the very significant change here with the South region at 147 units per project compared to a Northeast and a Midwest at 80 or 88. One of the things that's emerging, or actually kind of mature probably in the market, is the multi-use projects where they're putting a store, maybe a restaurant down below, and then they're putting maybe 15 or 20 or 30 or 40 multifamily units above that in a 5 or 6 story building. And so you'll see those counts come down. Just across the U.S. as a note here, there is the average for the U.S. was 110 units across that 3-year period. So 110 multifamily units per project of creation across those years, as we found in our data set today. We'll continue on our discussion here, and I'm excited to kind of hear Matt and Andy's conversation about some of the things that Andy's seeing along the way leading our research team. So Matt.
Hey, thanks, Kyle. Great job so far. This is pretty interesting stuff. I'm sure the audience feels the same way. I wanted to take a second to bring aboard into the conversation Andy Jarek, who leads our multifamily research team here at BuildCentral. Andy, on?
Hi, Matt. How you doing?
I'm well. How are you today?
Doing fantastic. I'm excited.
Fantastic. So can you help the audience understand a little bit about your history with BuildCentral and kind of your day-to-day activities on the team there?
Sounds good. I've been here just about 5 years. It'll be 5 years in the middle of June, actually. And my team, we generally spend our day going through all sorts of different sites and resources to try and find you projects as early as possible. So we've got city sites, county sites from the big ones like Cook County here in Chicago, LA County, to smaller ones like Onondaga County in New York. We're going through their planning sites, their design review, their zoning, their historical review sites to just kind of figure out which of those gives us the best information that we can make projects out of. We've got a resource management tool that helps us keep track of these sites. So that way, when the May agenda is coming up, we know it's at this date, and this is when we should be checking the website to see if they've uploaded that document. We've also got a bunch of different keyword searches that we use through Google. Pretty much all of the project types that Kyle talked about earlier. We're looking for all the senior stuff, the independent, the assisted, the nursing homes, as well as townhouses, condominiums, apartments, and the like. We've also figured out that like townhouse and townhome come up with different projects. You wouldn't think so, but that's what happens. So we are trying to be as careful as possible to make sure nothing slips through the cracks there. And lastly, we've got some tools built in-house that pull projects from those various city sites. They harvest them, and we're working on adding building permits to that. So that way we know our information can be up to date with the proper contacts, the project managers, and make sure that the schedule is correct as well.
Fantastic. That's a better answer than I was expecting. not to prolong things too much, but when I think of multifamily, and correct me, but I mean I read the headlines all the time, and affordable housing seems to rank right up there in all the headlines. Can you share with us anything interesting in that area?
Yeah, absolutely. I've got a few pieces here. So we here at BuildCentral categorize affordable, and I'm sure a lot of other people do as well, as units that are for people that make 100% or less than 100% of an area's median income. So obviously there's going to be a lot of projects in those large states that Kyle talked about, like your Californias, your Texases, your Floridas, and the like. But we've also been seeing a huge uptick of projects in places like North Carolina. I've been working through a source the last couple of weeks, and there's literally like over 100 affordable apartment complexes that are in the planning stages right now. Ohio is another big one as well. It's amazing that like those two states, you wouldn't think about it, but those are really leading the charge in affordable housing. And as you can see on the screen, 964 planned projects in 2016, and as of a couple days ago, we had 1,547 from 2018 to 2019. So affordable housing is on the rise. A lot of the companies that are developing these projects, they're committed to building multiple projects in one of those individual states. So for example, that North Carolina document that I was looking at, there's companies that are developing 5, 6, 7, more than that projects in one state. One of the biggest ones there, their name is Woda Cooper. They used to be the Woda Group, but they changed their name. We've got 137 projects of theirs in our database. And that ranges from stuff that's early planning right now to stuff that's been completed. But they cover what seems like every city in the Midwest, and they'll venture as far east as Maryland and as far southeast as Georgia.
Oh, very cool. So I know you're tracking some other interesting trends in this space, especially with respect to a new kind of hot trend that's kind of coming online called co-living. Can you tell us a little bit more about what co-living is and some projects of interest in that space?
Yeah, absolutely. So co-living or co-housing sort of takes me back to my college days. It's almost a dormitory. So you might have a private bedroom, but you share a bathroom, you share a kitchen, you share some living space, a living room, a family room, whatever like that, with 4, 5, 6 other people. There's you can share your amenities as well, your fitness centers, your rooftop decks, all of that stuff. I've seen a lot of utilities that are included with the rent, and then there's weekly cleaning of those communal spaces that are done by a professional company. So it looks like we're seeing a lot of this stuff for, it seems like millennials or kind of working professionals who are looking not necessarily to spend a lot of time at home, but to be out and about, come home, you've got the bare essentials, just enough to get you through the next day, and then you're back out again, working, writing, doing whatever. So one of the biggest, or two of the biggest right here, projects are Minna and Bassett. These are both being developed by a company named Star City. They're out of California. Minna, as you can see, is in San Francisco, and this is in the early planning stages. It's going to be 270 units with those private bedrooms, but they've got the shared kitchens, they've got the shared bathrooms. But what's special about this one is that half the units are going to be affordable units, which obviously for San Francisco makes a huge difference. As for Bassett's going to be 18 stories with 800 units. Now that's 800 units, but if there's 4 or 5 people to a bed, we're pushing 2,400 to 3,000 people living in that one building. It's similar to Minna with the private bedrooms, with the shared bathrooms. Rents are going to be targeted at about 80% of the area median income, so it's a little bit of a bump there. Each floor is going to have communal kitchens and those gathering areas to try and really bring people together. And this is essentially, that's going to be the nation's largest co-living building. I know that Star City is really proud that they're going to be the first people to have a building this large.
That's amazing, and it kind of makes sense when you look at how unaffordable housing is in San Francisco and San Jose. So that makes a lot of sense for their kind of first entree into that space. So as I understand it, that's a great move for millennials and Gen Z who probably aren't going to spend a lot of time at their domicile, right? But what about seniors? I hear that this trend is kind of tracking there as well.
Yeah, you're absolutely right. We've got a project to look at in Las Vegas. It's called the Villas at Centennial Hills. It just started a couple months ago at the beginning of this year, and it's it's a 6-building, 72-bed congregate care facility. Again, it's reminiscent of co-living, but being built with those seniors in mind. Each one of these individual buildings is going to have 12 private bedrooms for the seniors and private bathrooms, but they're also going to feature that communal kitchen, dining room, living room, and all of the outdoor spaces. So it's kind of giving the seniors a little bit more control of over their day-to-day schedule than, say, an assisted living facility where you're kind of still, you have a private room, but it's just your room. You don't have to interact with anybody. You're not really encouraged to interact with anybody. But something like this, if you're still seeking to be social, it gives you really a higher quality of life. You can interact with all of your friends, and again, maybe even reminisce about your college days.
Yeah, sure. Exactly right. Um, Andy, this is really good stuff. You're going to be able to stick with us for the Q&A later, right?
Yes, I'm looking forward to it.
Okay, great. I think some folks will have some questions for you. That was all really informative. I think Kyle has a few more topics to address, so I'll kick it back to him.
Yeah, Andy, and I just want to say why this picture's up here. Thank you for being a friend. Maybe somebody will capture that. So what we'll do now is we'll take a look here as we look at kind of the senior living. So we've talked mostly about all of the categories together. All of that data and information that was compiled and we talked about here in the previous slides are easily found in our analytics in multifamilydata.com. So all that data came out of the analytics components that we were able to pull out of that portal. And so in there, you're able to segment. So I segmented here the senior living product types for completions and comparing 2016 to 2018 in the units. When you look at just the difference, the total units between 16 and 18, you're looking at the number escapes me here a little bit, about 61,000 or so more units. It's just remarkable. And if you think about that continuing to stay is in line as a percentage of the overall, it gives you kind of a scope of the overall growth of the marketplace. So here's how they break out. So you have about 27 of the projects in 2018 were independent living, 37% were assisted, 25% for memory care, 9% included full nursing components, and then the continuing care at the end of the life living environment. So those are how it kind of fits in. A couple of things you can draw here for you're looking at a 3-year kind of movement, but you're seeing increase in the independent living. That's kind of matching up to baby boomers as they're kind of moving into that age bracket where that becomes more of a use case. The demand starting to pull that in, and we're seeing that shaping happening as it continues in the marketplace. What I'm going to do now is kind of talk a little bit about what we're seeing currently in our database. These next several slides are actually just screenshots right out of our analytics tool, and we'll just give you an example of kind of what we're seeing here in the current planning. So when we look only this time at the luxury market rate affordable, now we do have military involved in our tool as well, and we have the other categories, but just segmenting to these primary commercial units, this is what we're seeing. So it completed in the last 12 months, as taken maybe a few days ago, about 411,000 completed units. We have 878,000 units that we're currently tracking that are under construction. So in the construction phase, that means that they've turned over soil all the way up to the point where they're topping out or finalizing their last month or quarter of construction on the project. And then you have the completions out into the future. So we're planning in the next 12 months right now that we can identify and we can timeline, and Andy's team, very stringently looking to try and identify those timelines and be able to project when that breakground is going to happen. We have 100,000 units. Take a look at the big number there, right? 1.3 million units that we have that are tied to actual projects that are in our planning cycle today. So here's a great example of why you need to be monitoring market, because I can assure you not all 1.3 million of those units are going to be built. As we continue to look at the analysis of the pipeline, so here's a breakout of what we're seeing in our planning. This is the planning cycle here. We're looking at mid-rise, that's 4 stories to 11 stories, and the units there in the planning. You also have high-rises being the second, low-rise being the third category there. Townhomes, 142,000 units identified in our category as a townhome. Okay, we'll continue to progress and look more at the pipeline. So here's what we estimate for completions as we look out into the years 2018, 19, and 20. You'll see the completions that have happened historically at 375,000 to 415,000. In 2019, that may grow some. We're estimating about 425,000 based on the projects we're confirming or complete in 2019. You see a drop off here as we head out into 2020 But that number will pick up as more timelines become refined and things kind of center in over the course of 2019 and into the short part of 2020. Although we would see and anticipate a rounding off here in the luxury market rate and affordable project types. Current senior living planning. Now we're looking at only the senior living. So in the senior living side, we have California really leading the marketplace here in planning through construction. So California has the most projects at 42,000. Florida is next, New York is next, and Texas, you know, the big four. Probably not a big surprise to many on the market on the call today. But this was interesting to me. So when we look at the cities that are actually planning the most, there's going to be a lot of seniors helping keep Austin weird. It's actually the biggest city development that's under planning or construction for senior living in the U.S. right now in our database. So kind of an interesting standout, and we'll actually use that here in a few minutes to kind of show how we can attack and understand that marketplace. Somewhat of an interesting find in our data as we're pulling through. Moving on, I want to just talk about a couple trends. So there's lots of people that will weigh in on macroeconomic forecasts and things like that, but there's a couple things that I think are very important and that are basically undeniable. The first one is we take a look at the senior living. So this graph, which is kind of put together by a combination of the U.S. Census Bureau and some other data, that the elements there are all below as it talks about the different census reports. But you're looking at population of 65-year-old plus and where they were at compared to millions. So we're using this left scale. So here's the population as they continue to put more and more individuals are living longer and longer. Our population 65 plus goes up. And then you see this kind of 65 plus as a portion of the total population, right? Well, we're about right here, right? We're in this blue box. There is some significance to the amount of that this population group is still going to grow as we look out into the next several decades, 2030, 2040, 2050. And so there is undeniable market demand that's coming into these marketplaces and will drive continued increase into this portion of the marketplace. Hence why we're optimistic about that. The other component that I think I want to share that I thought was the most interesting in my research about the overall trends and reasons why we're seeing things in our database is this kind of thought process of, do I buy or do I rent? And many of those that are entering this market now are looking at what happened in the Great Recession and others where the upside down housing market really caused a lot of pain and agony at their dinner tables or their parents' discussions. So what this is showing is a trend that's fairly unique. It's a separation of the annual cost of ownership versus the annual cost to rent. So put together by some Freddie Mac, Census Bureau, and some Moody's, some data pulled together here, we're looking at this separation between this blue line and this green dotted line. What it's showing is that it's becoming more and more on an annual basis expensive to own than it is to rent. And that's going to continue to drive people to think about, maybe buying that mortgage or buying that unit to live in is not as important as the short-term return and the cost of that ownership is too high and going to drive me towards more of a multifamily experience, which would continue to put pressure on this kind of unique marketplace where that growth has happened. So two big kind of keys that I think are undeniable, well-sourced, and would cause us to kind of meet what you guys in the room talked about today, an optimism for the future. So we're going to keep going here. Just a couple, three things. I'm going to do this part really fast because I want to get to the questions and make sure we get time for that. But there's what can you do today? So if it's an uncertain market, you're not entirely sure where it's going, what can you do? So if I'm in a business where I am tied to multifamily and I'm tied to a certain market, I'm going to have to identify those strong bonds. Of those 1.3 million projects, not all of them are going to complete. How do I figure out who's going to actually complete theirs. The second option is I can diversify by market. So I'm tied to multifamily, but now I'm going to make sure I understand where those markets like Austin in the senior living side or other places are that are driving the demand next year and into my pipeline. So I'm going to find markets that are diversified. The third type is to think about diversifying by segment. So multifamily has been a great ride. Had a great conversation with a contractor here recently on the West Coast who lamented they had a strategic session. They talked about how they used to be very strong in the medical construction. The opportunity for multifamily construction came along and it overshaped their portfolio. So now they have too much going on in multifamily and possibly a receding market, and they're trying to figure out how exactly to rekindle that spark in the medical construction. So as we think about that, FMI is a consultancy company, well respected in the marketplace, to helping people kind of think about strategy and development, and their research and all their experience shows it takes about 18 months from the time of entry to find positive financial performance, whether that be by market or by segment type. So if you think out 18 months, 2 years, now's the time to start acting. It takes a long time to move a ship. So how could we help with that? I want to share. So the first thing is, how do you find the true influencers? If you think about what showed up in 2012 for the architects, there's 20,000 architects in 2012 in the census. Of those, we have 24,000 in our database. If you look for those that design only multifamily properties as we define them, there's 7,700. Getting a little bit closer, but you still can't influence all those. So now if you look at the U.S., there's only 1,834 have worked in senior living, have a project. 421 of them have a project in planning. So of the 1,800, only 420 are really working on something today, and only 88 of those across the entire country have more than one project in design. So as you look about a country, think about a market. So if I'm in Florida, guess what? There's probably just a few handful that are tied to senior living. So the ability to narrow that down and identify those true people that are going to influence those builds that are going to happen in the next couple of years, so critical to be able to get the intelligence out of a tool like BuildCentral. The other one to think about is developers, right? So as we go into this market, there's going to be a time the market will downturn and those projects will quickly get shelved or be paused. So if you look at the developers just in our database, we have 21,000 developers tied to multifamily projects that we reported on. About 18,000 of them have a project in planning, it's in construction, or they completed one in our history. That means there's about 2,900 developers who we put on a project and that project never made it. So when we think about that, you have to be able to identify quickly when a project pauses or stalls so that you can identify and quickly move your resources to go on to the next one if you happen to be pursuing that. So if you think about 8,376 developers with projects and planning, they're not all going to make it. How do I know what's going to make it? How strong are they in the market? How many units have they built before? Do their relationships are strong? They've got a full vertical pipeline. And we have the ability here, you see an example of a profile of a business, Flaherty and Collins Properties, 48 projects. They're tied to specific. We can look at where they're at, when they've completed them, how many projects of theirs have actually progressed, or how much have canceled, right? So a great way to do the research to make sure you're finding those right relationships. And a couple of things here too I want to show you. This is a quick little pull out of our portal talking about top owners. So I went into that the Austin market, and I wanted to see, all right, if that's kind of a unique build case for senior living, who are the top owners and developers? And you'll see here it's ranked by those that completed the most units in 12 months. I want you to concentrate as I walk through this next couple of slides on the list. So Owen Hughes has built the most units in the last 12 months in the city of Austin, 811. That's great, right? Maybe they're the perfect target to go after. Well, if you take a look then at who actually has the most units that are in planning or development, they disappear here from the list, right? They don't even show up on those that are under construction or in planning. So this Endeavor Real Estate Group has 2,500 units in planning. Maybe that's the exact, planning or construction. That's who I'm going to go after. I'm going to build my relationship with. Well, guess what? They have no units in planning. All of their units that they have tied are actually under construction today. So if you're looking for future work, you're going to be maybe not wasting time, but you're not deploying your time appropriately for the planning. So if you sort that again by units and planning, all of a sudden you have a whole new list of people that are going to be driving projects in the Austin market in the senior living. So here's the top 10, right? And without that intelligence, even the most assertive tag team salespeople, asking for the close or working towards those projects just aren't going to develop it because they're working the wrong relationship. And the last thing I want to talk about is then your thought process about balancing your portfolio. We've shared a lot of information here today about multifamily data out of our multifamily data portal. I want you to be aware we also have a medical portal very similar, a hotel portal very similar, and Construction Wire, which captures all of the commercial construction market. We have the tools and abilities to help you think about that, even if you're looking at balancing your portfolio outside of the multifamily data. So with that, I thank you for your attention and for time. I look forward to the questions, and I'll toss it here back to Mr. Slavin.
Tim, you got it. All right, good job, Kyle. Thanks very much. Looking back over the past 45 minutes, 22,000 projects in multifamily. We've presented probably a few hundred, if not 1,000 different facts, indices and slices of data that tell you what the broad market trends are in analytics. From there, we dive down into the individual company profiles that you should be targeting, as Kyle talked about. And then from there, we go down to the individual projects that multifamily will tell you about, the stage, the timing, the value, the partners, the contact names, and emails. And so here's a couple of things for you as we wrap up and go to Q&A. Camp at BuildCentral, if you'd like to connect with Kyle to do a consultation and pull out the facts that are relevant to your specific part of the market. Camp at BuildCentral. If you want to connect with me, it is Tim at BuildCentral, and we'd love to have the opportunity to show you what data would be most helpful and beneficial to you as we go forward and let multifamily data work for you and your business as well. Thanks a lot.
Great presentation, guys. I think everyone's pretty pleased with learning about their specific regions and where the market is headed. We have some time left for some questions, so I'm just going to dive right in. Kyle, the first question is for you. So what is the BuildCentral forecast for the future?
That we're going to have one, that there's going to be lots of multifamily units built. When we think about is the boom over, I don't think the boom is over. I think there's been some cultural shifts that are well documented in the marketplace. Now, we don't actually put together a 5-year forecast that I talked a little bit about in the conversation here. We're actually going to show you the projects and developers that are actually making activity in the next documentable couple of years. Forecasts are good, but the first year, second year, possibly beyond that, they get really hazy. Too much can change. So we focus on the near term here, and our forecast would tell you that senior living is going to grow very significantly as a portion of the marketplace, and there are going to be metros and locations outside all across the country that are super hot and those that aren't, and the best way to identify that is by looking at the data.
Great. While I have you, here's another question for you. We got an audience member who's interested in stats on Detroit and Michigan. I know we didn't reference that region specifically, but what do we know?
I can tell you that maybe that's my neighbor because that's where I'm located at here in Michigan. But
Exactly
when we look at Michigan, what's happened in the last couple of years here, I just pulled up the data set I've been working off of some. In 2016, Michigan put 7,300 units in. In 2017, 9,600 units in. In 2018, 12,600 units in. You're looking at growths here of 13 double-digit growths in Michigan, and a lot of these are happening in the Detroit area where there's a renovation underway in that urban market. And so absolutely the data shows that, and you'll find other metros around the country as well exhibiting the same way.
Great. Next question is for Andy. First of all, do we track military housing in our data?
Yes, we do. Military barracks, dormitories, stuff like that. We do track it.
All right, fantastic. But another question I had for you is, what's the next up-and-coming state for affordable multifamily? Is a great question that just came in.
Sure. So from what I've been seeing, I think the answer is actually going to be Alabama. We've entered about 60 projects over the last 2 years from them, or in that state. And then similar to like the North Carolina and Ohio that I talked about earlier, a lot of the same developers are planning multiple complexes over the years there. So they really seem to be setting roots down in Alabama.
Okay. Do you have any insights as to what it is about Alabama that maybe why?
Honestly, I'm not 100% sure on that one, Matt.
Yeah, no worries. Yeah. All right, I got a question for Tim as well. This is, I think, right in your wheelhouse. How can I look at my own sales pipeline accurately to predict sales in the next quarter?
It's the magic question. I think the short answer is you look at the behaviors and the results of your sales team historically. You're going to be in one of three categories: somebody who is overly optimistic, somebody who accurately forecasts, and then those that kind of sandbag and don't predict very much, and they love to always overachieve. The two outliers at the top and the bottom are difficult to manage, but to go deeper, I'd love to have a one-on-one conversation with a sales leader who's kind of grappling with that, because I have an approach I'd love to share.
Great. I think we've got time for one last question before we wrap things up. It's another one for you, Andy. I'm in Florida. What's happening in multifamily in my area?
Okay. So according to our analytics, there's 34,000 units that have either started construction in the first 4 months this year or will be starting before the end of the year. It seems like Miami-Dade County is the county that seems to be outpacing everybody else. They've got approximately double the projects in either planning or construction, double of Orange County, who is their next closest competitor. So as a whole, Florida seems to be very comfortable. There's thousands and thousands of units in planning, but South Florida has the most activity by far.
Okay, that's very good to know. We do have other questions to address. I don't think we have time to address them all online, but we do promise that we will address them offline. So for anyone that we didn't get to, I promise we'll be following up with you after we close. Just some kind of closing notes here. A reminder to expect an email in the next 24 hours with a replay of today's webinar and details on how you can get complimentary access to our data. And because so many people have asked, we are planning future webinars covering other topics. So to that end, if you would just take a brief survey that will pop up on your screen after this webinar, it'll give us a chance to learn more about what you'd like to learn on the next event. Thanks to our audience for attending. Thanks so much to Tim, Kyle, and Mr. Jarek for their great presentations. Signing off. Have a great rest of your week.